Here are 3 things that you might not know about mortgages, and the third one is gonna make you a lot of money. Here are 3 things about mortgages that you probably don't know, and if you do know, now would be a great time to use them. So in the mortgage market, we're always talking about ways that people can spend money, right? What about ways that people can save money? Let's talk about those. So the first hack, if you will, is called a gift of equity. I'm talking to a lot of people right now that are buying houses from their family members. When you're buying from family, there's so many creative ways that mortgage lenders can structure your mortgage. And that's the gift of equity. Let me give you an example. My client yesterday came to me and she is buying a house which according to Zillow is worth $398,000. It's her mom's house. She's been living there for 12 years. It's time to buy the house now from her mom. So her mom has agreed to sell it to her for $340,000. Now the house is worth $398,000. Her mom's gonna sell it to her for $340,000. $398 minus $340, that's $58,000. She's getting that house for $58,000 less than what it's worth. Her mom is giving her that $58,000, not physically, like she's not handing her $58,000 in cash, but she's giving her $58,000 in equity. She can use that as her down payment, which comes out to about 14%. So she's paying no money out of her own pocket, but yet she's able to put 14% down on her new house. She came to me assuming that she was gonna need a down payment, and so she asked me, what's the minimum amount that I need down? And I was like, 0. She's like, wait, what? What do you mean 0? I'm like, well, you already have $58,000 in equity that you're putting down. You're not writing a check, your mom's not writing a check, but that equity is there. And I would consider that her down payment, and it looks really good to the banks because she's coming in with 14% down right off the bat. And we love that. That's way more than the minimum required. So that's the first idea, gift of equity. If you have a family member that's gonna sell you a house, let's talk about how to use a gift of equity. My second hack, if you will, is called an assumption. There are a lot of people out there that have 2, 3, 4% interest on their mortgages, and they're selling those houses. If they have an FHA loan and a VA loan, most of the times those are assumable. So what that means is, as a buyer, you can take over that seller's mortgage at 2, 3, 4%. You don't have to go out and get your own mortgage, which today on average is around 6.5%. So look for a seller that has an assumable mortgage. They might not even know if they have an assumable mortgage. You might wanna ask the seller, is your loan an FHA loan or a VA loan? Because if it is, most of the time those are assumable. Taking out a mortgage at 2% is gonna save you a lot of more money versus taking out a mortgage at 6.5% right now. So look for those deals on assumable mortgages. Okay, and here's that third idea that I was telling you about, that third hack. This is the one that's gonna make you a lot of money. So you wanna buy an investment property, right? All the rich people have investment properties. Why shouldn't you have an investment property? You wanna be rich. Heck, I wanna be rich. Let's get some rentals. But getting a rental property, normally you have to put 20% down. That's a lot of money to save up. Think about a $450,000 house. 20% down is 90 grand. How are you gonna save 90 grand? If you have it, great, come talk to me, I'll help you get that rental right now. But if you don't have 90 grand, I have a great idea for you. When you're buying a primary residence, you only have to put 5% down, and you only have to live in that house for 1 year. So let's check out this scenario. You buy that $450,000 house, you put 5% down, you live there for a year. In a year, you come back to me. Amanda, I'm ready for another house. Cool, okay. This next house is also gonna be your primary residence. So even though you already own a house, the fact that you're buying the second one as another primary residence, you still only have to put 5% down on that next house. So you take your first house that you bought with 5% down, you turn it into a rental, you didn't have to put 20% down on it, you only had to do 5, you turn it into a rental, now you buy another house, 5% down. You live there for a year. Then in a year, you come back to Amanda. You say, Amanda, I'm ready for a third house. And because this third house is gonna be your primary residence, again, you still only have to put 5% down on it. So you can keep building your rental portfolio one at a time and just putting 5% down each time. The banks don't mind if you do that as long as you live in the house for 1 year. That's gonna be our rule. It's your primary residence, you have to live there for a year, and then you can buy another primary residence. How crazy is that? So here's a question that you're probably asking. You're like, Amanda, great, I love it. I want 3 houses. I want my rental portfolio. But what if you can't qualify me for 3 mortgage payments? What if I can't afford 3 mortgage payments? That's okay. Most people cannot afford 3 mortgage payments. That's a lot. But we know, the banks know, that you're not gonna be paying all 3 of those mortgages. You're gonna have renters in those houses. So if you come to us and say, hey, I found a renter, here's a rental agreement. Here's how much I'm gonna be renting that house for. We're gonna use 75% of that rental income right off the bat to offset your mortgage payment. So you're not actually qualifying for all the mortgage payments each time. If you have a renter that's covering your mortgage, we're cool with that. You just have to qualify for the mortgage payment on the house you're gonna be living in, because that's the one that you're gonna be paying, right? So I hope these 3 hacks, or at least one of them, maybe all of them, can help you get into a house. Let's save some money. I'm Amanda Ray with Guild Mortgage. I would love to talk to you more about any of these 3 options.